Time to have a look at the markets. Well, Asian markets mostly higher with the Nikkei up 0.5%. Japan announcing that they're going to be extending their state of emergency, and in some areas likely until September. But in that case, nonetheless, mainland Chinese markets a little bit higher at this point. European markets also the same theme is following through with investors waiting for inflation data as well as the FOMC minutes. Locally, the big news was, of course, the JSE with trading delayed, and they did release a statement just half an hour ago saying that trade reporting likely to kick off in the next 2 minutes. Open auction at 2 o'clock and continuous trading will take off from 2:30, that is. But to talk to us about what happened this morning and various other things, we are joined by Chantal Marx from FNB Wealth and Investment. Chantal, thank you so much for your time. I mean, let's talk about this delayed start to the trading day for the JSE. I spoke to some very frustrated traders this morning. From your perspective, what were some of the sentiments you were getting from your team?
Yeah, again, very, very frustrated, very similar to the guys that you spoke to. Everyone was really excited to go out there and get trading, specifically after the big moves that actually caused the problem in the first place yesterday. So a lot of frustration, disappointment, and I think a lot of people thinking about when last did this actually happen. And I reached out to some of my followers on Twitter, and no one was able to give me any kind of dates. I did see that Simon Brown told me that in 1987, the market was actually closed for a full day. And then it seems like somewhere around 2009, but no one's really sure. The market only opened at 2 p.m. and closed at 7 p.m. But it looks like we're going to close normal time today so far. I don't know. We haven't actually had that communication yet.
All right, so apart from that, we did have results come out of Curro, despite everything else that was happening in the background. What did you make of Curro's financials?
So thankfully, Curro's results were very well guided for. We had quite a detailed trading statement a few weeks ago. So we knew that learner numbers were growing quite strongly, that revenue was up quite nicely, but that they've seen some pressure come through on the EBITDA line, so that's operating profit. And that's due to some very strange base effects from last year. So schools were actually closed last year for 3 months. And because of the cost savings that they had, because there wasn't any activity at these schools, the base was actually quite low for costs. So the cost that came through this year was disproportionate. And as a result, we saw some margin pressure there, and that filtered down to the bottom line. What's also important to remember with Curro is that they had a big chunky rights offer towards the end of last year, which resulted in the number of shares that they have in issue increasing. So a per share measure also not fully comparable with the previous year.
Let's talk about Naspers. I mean, if you had to compare it 5 years ago versus now, what has been the performance of Naspers? Do you get the sense that it's losing ground, and does that concern you in terms of where it could be going?
Now, when you look at Naspers, it's very important to look at Naspers and Prosus together, because remember, Naspers shareholders received Prosus shares. So comparing Naspers 5 years ago relative to now is not necessarily fair. But when you count that back, and I did a very rough calculation, just to full disclaimer here, Naspers still returned about 13% per annum over the last 5 years relative to the JSE of about 6%. So this is both without dividends. The JSE didn't perform particularly well. Naspers actually did quite well, but both of them underperformed the likes of an S&P 500, for example. So domestic returns locally, I think, has been a little bit dampened for a while now. And I mean, I hope that this recovery, or that we start seeing a bit of a recovery in Naspers and Prosus. There's still a lot to be excited about in terms of Tencent. And now, of course, you still have some of the nuances to work through, like the recent index rebalancing, which shouldn't fundamentally change the valuation, right? It's a function of flows.
Right. So Chris Gilmore, who many of our viewers may know, is a regular market watcher with us on this particular platform. However, he wrote something quite interesting, a very interesting article, which I had the opportunity to share with you just before we got on air, and basically saying that Woolworths should be exiting Australia and list the Woolworths food business separately. What were your thoughts on that article and some of the points that he brought forward?
So I do think that he makes some really great points, but the thing is, it's complicated, right? So in an ideal world, the Woolworths food business would be listed separately, but it's almost impossible at this point to separate it from the clothing business. If you just consider walking into most Woolworths food divisions, you are walking through the front store area, which has Woolworths food, beauty and home. So it's a lot more complicated than just simply unbundling the food business. And I do think that they complement one another to a certain extent. In terms of Australia, it's probably a little bit easier to get out of Australia or to separately list Australia, or I think it's very difficult to sell the Australian business just because it's so big and chunky. But I think that in an ideal world, Woolworths would actually want to go back in time and not buy David Jones and only stick with Country Road Group. But now they've undergone a journey of integrating Country Road Group, which is a really great business, and David Jones. And I mean, we are starting to see a bit of an improvement there. The balance sheet in Australia looks a lot better. In terms of fashion in South Africa, they're starting to do the right thing. So I'd still give them a chance for now. And I do think that the suggestions have merit, but they would be very difficult to execute.
From your perspective, what seems to be the market focus? If you had to look at, from local investors and global investors, what are investors looking at right now?
Oh, it's all about the Fed again. So we have FOMC minutes today, but I think it's probably still going to be quite on the boring side, just because everyone's looking forward towards Jackson Hole next week, which is the U.S. Federal Reserve's kind of meeting of monetary kingpins to discuss all things policy. And it is at that specific symposium last year that we learned that they decided to change their inflation target to a hard and fast 2%, where they'll start increasing rates to allowing it to average 2% over time. So I think the market's quite keen to see what the latest thinking will be out of that specific gathering.
All right, Chantal, thank you so much for your time. That is Chantal Marx, who's from F&B Wealth and Securities. And of course, we will keep you updated with other information coming out. So you can keep a lookout for that particular interview a little bit later on during the day. That's it from me. We're going to take a quick break, and when we come back, we'll have more news for you.